Thanks for joining and welcome back to Wall Street Silver. Our guest today is my good friend Gary Wagner, the editor of goldforecast.com. Welcome back, sir. How are you?
I'm well, and thanks for having me. Good to be here.
Yeah, it's good to have you on as always. I wanted to get you back on to talk about all the craziness that's happening in the world, the markets, gold and silver. First, let's start off with central banks. Central banks are buying the most amount of gold, at rapid pace, record pace. Why are they doing that? Is it a mix, Gary, of monetary policy being so bad, or why do you think central banks are buying so much gold right now?
Just ask your followers why would they rather have their fiat currencies in gold or silver?
Right.
The answer is that it tends to hold value better than their currencies. As long as countries have an economic policy in which they go deeper into budget deficits, fiscal deficits, the end result is that it not only destabilizes their currency, but it lowers their value against other currencies. And, for years, not only myself, but many analysts have said it's kind of a race to zero
Right.
because it's based on the faith that you have in your government. But when the governments continue to go deeper into debt, can that faith increase or decrease? And in terms of the central banks, they realize that probably the most stable asset that they can hold in terms of different currencies, because I look at gold and silver as a currency at this point, are the precious metals. They tend to hold their value better. You can't add debt to an ounce of
You're
gold.
absolutely right, Gary. Like there's so much turmoil that's happening with the US dollar too. You look at the US currency compared to the yen and compared to all the other currencies. How long can they kick the can down the road for the US dollar? There's so much debt. How does that play into precious metals and your outlook?
Well, your first question is an interesting answer that I cannot elicit a eloquent or even adequate response. Think of it this way. If you look historically speaking to governments and go back 100 or a couple hundred of years, governments spent what was in their coffers. There
Mhm.
wasn't credit, there wasn't the modern institutions of being able to transmit or wire money from country to country. And the policy of the economic system we have, Keynesian economics, which is the way you get out of a recession,
Right.
is to print more money to stimulate the economy, is relatively new. It really picked up steam after World War II. And so, how does this experiment end? I don't think anyone can tell you yet. Hopefully, not in absolute disaster, but I can't see where it's going to bode well over time. How long will it last? No one knows because we have not, as a culture, as a civilization, as humans, lived this way
Right.
for that many years, less than 100 years,
Yeah,
maybe
absolutely.
a little over 100 years, but not that long.
Yeah, absolutely. And where do you see inflation going, Gary? Like there's so much like people talking about it every day online, grocery bills getting more expensive, the dollar's being devalued, so their purchasing powers is eroding. Like where do you see inflation going? Can the Fed even meet its targets of their inflation rates?
Well, according to the data that the government releases, and that's what I'm going to underscore is the government releases it, inflation has been consistently declining. We're sitting, what, just above 3%, just below 3%, right in that area.
Right.
The preferred gauge of the Fed is the PCE, which is the personal consumption expenditures. That comes out on the 26th of July. The Fed will then convene and then conclude this month's FOMC meeting on the 31st of July. The anticipation is that they're going to hold rates steady at this meeting, but the next one, according to the CME's FedWatch tool that basically gets their data from futures traders that are trading interest rates, they believe it's almost a certainty. It was sitting at 100% probability of a rate cut in September. Went down to 96 today,
Wow.
but it's exceedingly high. So to answer your question about inflation, according to the numbers, it's been coming down. But the one thing that I always remind our viewers, and I almost don't want to because it's a sobering fact,
Right.
and that is typically when prices go up on the goods and services that you need to live on, they tend not to go down after everything settles down. In other words, if inflation ticks down, we're not seeing costs on essential goods and services really going down
Right.
that much. And so even though it's not going to grow, and that's the key, inflation is not growing at the spiraling numbers that we saw in 21, 22, 23 for a little bit, and they have gone down considerably. We're not getting inflation at 9% a year or
Right.
5% a year, but we are getting inflation even at their 2% target. What does that say? That says that each year at best, your cost of goods and services will increase by 2%. And that's a best case scenario. That's what they hope for. So we're not hoping for the dollar to have greater buying power because it never has. And as long as we live in an economy and a government that allocates more spending than they take in income,
Hmm.
the currency is not going to have a greater buying power. It comes down to relative to if you're taking goods and services from other countries, it's one thing. But if you're dealing with a single currency, your goods and services are are for the most part bought in the United States. If you're here in Canada, if you're here in Canada, your buying power is being reduced year over year, decade over decade. And
Yeah.
that's not going to change, I don't believe. I'd like to say that it would, but I don't know what would precipitate that change.
Absolutely. I think it's the same as you. I don't think it's going to change. They're just going to print more money and they're just going to be more debt and all the craziness. Now, what do you think is after, what's their next play after the US dollar, Gary? If they can't kick the can down the road for so long, do you think they'll come out with a digital currency? What do you think it'll be backed by? All that.
Well, I mean, inevitably, to me, this is my opinion, obviously, but it's not if, but when
Right.
currencies will move from paper and coin currencies to digital. They've already done that. I carry cash on only rare occasions.
Yeah.
I typically use a debit card or credit card, which I pay off at the end of the month.
Right.
But I don't carry a lot of cash in my hand. Luckily, I'm not a big gambler, so I don't go to Vegas. That would be the only place that would really necessitate having cash. So we've already, to a great extent, moved to a digital currency. And the key is that the people, the individuals, the citizens that are unable or find it difficult to use that technique, a payment technique, tend to be the ones that are struggling because they're in a lower income group, so they're making less money,
Right.
and they've got issues to start with. You know, in some cases, it's difficult to get a bank account or other things at the lowest levels. But even those that are lower middle class are still struggling in terms of the weight of wages rising, but not rising enough to account for the rise in costs of goods and services.
Yeah, absolutely. You nailed it, Gary. Now, what are you stacking right now, Gary? You stacking silver, gold, or anything other than that, or any
Well, you know,
investments?
I've always believed that gold and silver are an essential part of everyone's portfolio.
Right.
You should start doing it when you're a teenager, to whatever means you can. And so, because of the disparity between an ounce of gold and an ounce of silver, most people starting off find it easier to begin investing in silver. However, recently we've seen silver run into some real resistance at moving back even to, above 30 or
Right.
prices that we've seen before. So silver's hit $50, but it never returned to that. Since April, gold has hit three all-time record high or closing prices, multiple new highs, but three record closing prices. Today, the high in gold was 24.88 in August futures. So we're closing in on 2,500 an ounce. At the same time, we've had silver struggling to go back above 31, $32.
Yeah.
And I believe that that's the benchmark silver, or the obstacle, I should say, not benchmark, but the obstacle silver needs to overcome to build momentum. Because here's the key: recent statements by Chairman Powell and today other Fed members have talked about the fact that it is getting close to being time to cut rates.
Right.
And we know that when they cut rates, that's going to create more bullish momentum for the precious metals. And the key to that is market participants are focusing on a single rate cut. When are they going to initiate the first rate cut? To me, it signals something a lot more significant, and that is the pivot by the Federal Reserve from maintaining elevated rates. First, they raised them, then they
Absolutely.
maintained them. And so when they cut rates in September, it's more than just cutting rates. It's signaling that the Fed is now pivoted to interest rate normalization. Now, it used to be a normalization would be to get interest rates, or excuse me, inflation down to 2% and interest rates down to 2% in terms of that.
Right.
Interest rate normalization, right now, they're only anticipating getting them down to about 3% by 2026. But the key is that will take a lot of 0.25% cuts when benchmark rates are sitting above 5%, 5.25 to 5.5.
Yeah.
So they're going to have to cut rates on multiple occasions as a multi-year process over the next 3 years, including 24, to just get to the 3%, which was their goal. The fact of the matter is, it was a scenario by the Fed during the first quarter of this year that they might not be able to reach that because they weren't be able to cut rates
Right.
because inflation was spiking up. The last 3 months had solid data supporting inflation is moving back on a downward trajectory, and more importantly, that the path of that decline will take it to 2% in inflation,
Right.
which means that they can begin to start cutting rates and normalizing interest rates. And that's going to be a huge factor in moving both gold and silver up. The interesting thing when you think about it is, not too long ago, we looked at high inflation as providing solid bullish sentiment for the precious metals. The higher the inflation, the more attracted we were to the metals because they're more stable.
Right.
Whereas now it's gotten a lot more complicated, where lower ticks on inflation are bullish for gold and silver. So we're living in a kind of a topsy-turvy time in terms of that. That basic philosophy is kind of flipped on its head. And so the key element that I think that your viewers should focus on is the fact that the first rate cut is a signal of interest rate normalization,
Right.
and that's a multi-year process, which means we can expect these recent movements in gold and for some parts silver, because silver has moved off of the lows that we've seen earlier this year,
Yeah.
move to new uncharted territory in gold and revisited territory that we haven't seen in a decade in silver, meaning above $32 per ounce.
Absolutely. You nailed it there, Gary. And we're watching silver and gold so closely now because any day now you're seeing the momentum build for sure in gold. But you're right. There's some massive resistance at $30 or around 30 for silver. But again,
Yeah,
I want to thank you so much, Gary, for coming down to Wall Street Silver. It's such a huge pleasure having you come down always, and hopefully as gold and silver develops, or the market, or even the Federal Reserve, me and everyone, of course, would love to have you back on.
I'll be happy to be back. Just give me a holler.
Awesome. Talk to you soon. Thank you, everyone, for watching.